Hello and welcome everyone to this morning's daily market report brought to you on behalf of CommunityFT, in which we'll take a look at some major asset classes and some moves pending some major economic announcements over the coming 24 hours. But before we do so, let us all take a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible so that hereafter any decisions you make in your trading are of a fully informed nature. Now on the cards for us today, let's take a look at some economies or currencies. Let's also take a look then at crude oil as well to help us analyze an energy and again be rather diverse within our analysis. So in front of us, let's go to the platform and we're now looking at the daily chart of euro sterling. Okay, the first thing any trader will notice is the relative inaccuracy, but sometimes accuracy, of the 55-day exponential moving average moving along with this particular chart. And it's of interest to us because at a time when the market crosses that price, it can be a signal of a movement in the upside or downside direction if it crosses from low to up or from bottom to low or from top to low respectively. Now, in terms of opportunities today and opportunities in the meantime, we could be looking at some other popular indicators, and what we could be looking at is a stochastic oscillator. The stochastic will help us to find areas where the market is overbought or oversold. That may not be indicative, and in most cases isn't actually indicative of a major trend, but usually simply a quick reversal, as is the oversold sign in this particular case, helping us look for possible entries to the short side to maybe scalp some positions here. So in terms of those particular opportunities then, many of the quick traders really looking for swing trading, if you will, in the daily charts will be using the oscillator. But so long-term range traders or trend traders will be looking, or sorry, not range traders, trend traders will be looking for the exponential moving average or indicators therein like the same. Now, there's some important economic data released tomorrow, and that will be the CPI, the Consumer Price Index related to the sterling or the UK economy. And based on that, we may see a move in the market, and it could be a bearish or a bullish one. Okay, let's move on. What we're taking a look at now is the daily chart of crude oil. So in this case, the 100 exponential moving average over the last given period of time has been exceptionally accurate with regard to showing us where certain opportunities lie, in that when the chart crosses this particular indicator, it's a signal usually for a buy, and of course in that particular case it was a nice order, and then here we could have had a stop and reverse technique, exiting our trade and then entering another one on the short side, which would have worked out well. Now, in terms of understanding when the market is going to do so or going to move in a manner that isn't lagged, okay, what we mean by lagged is it's a bit late. You can say to yourself, we can use the bearish volume to see when an increase happens. But the problem with that is when a notable increase occurs, okay, usually it's a case whereby we're too late and we've missed the overall trade. And that happens in all cases here. And it's similar to this one as well, this particular example too. And it's not necessarily at all times indicative when it decreases of when the trend is about to decrease. So for that particular scenario, what we like to look at, and this is our own custom indicator here, is just really an example of how you quickly catch the breakout upon its birth rather than late to the show. And this is one indicator that can catch that for you, one that we've developed ourselves with relatively high accuracy, but moreover a very strong risk to reward ratio. So we hope that this has been of help. If you have any further questions, do not hesitate to get in touch. We welcome all inquiries. We'll catch you tomorrow, and as we say here, keep learning.